Okay, team, Apex Trades here. Not done a video for a fair few days actually, but we want to go and see what's been going on with the charts. Some interesting ideas, something not too much has been over the weekend. You can see we're kind of in this small lack of volume area, very little liquidity at this, specifically for market makers. Obviously, because there's no institutional or hedge fund kind of input, so you see this really low volume area now. Kind of thinking about our setups and how we can enhance our trading a little bit just coming into the new week. So if they're currently on the 4-hour chart, BTC obviously as we trade now, I've seen a formation that is quite interesting. This was the sell-off from the FTX fallout. You can see a huge big sell-off, and now we've consolidated for such a long time. But I think we are heading down for more blood, and let me explain why. So right now I can see a bit of an ABC pattern. Let's just go and show you that. Building up. Right, so let me just get rid of that. Let's see what we've got. We want this one. So you can see we have, if you go from down here to up here, that's A, and then from A to B, and then the B, which is your, you can consider A and C to have a Elliott 5 wave embedded within them, and then a corrective between A and B. But you can see, I mean, if we just plot it out and draw it out on the chart, you can see quite easily. So let's just do a mini 1 to here, and 2 down there, 3 up to here, 4 down there, and then finishing off with the 5th wave. So you can see we've got 5 waves between, you know, for your first corrective A wave, and then we can look and do an ABC pattern again from A, B, so 0 to there's A, and then A you can pick anywhere, probably there for B, and then finishing off with C. So that's within this structure here. I'll just make that a bit bigger so it's easier to see. And then we expect another 5 wave here, right, in terms of our impulsive move to finish off an ABC pattern. So we just go again, you start 1, and you got 2 here. You need to have there or there. Let's go there, 3, 4, and then this 5th wave, which is coming up here now. I don't think we're expected to see a big move to the upside for the 5th and final wave, although it is an impulsive move we'd expect, simply because, you know, our first wave and our 4th wave have kind of intersected a little bit, which usually means you get a weaker 5th leg of your Elliott wave. So I'm anticipating a bit of a move to the upside before essentially a much larger move down. Let me just get rid of them, take them off the chart. Okay, now we'll just put them on here because I've already mapped these out. So you've got A, B, C, and then 1, 2, 3, 4, and then the 5th wave here. We can actually look and devise a, so if we want to look at potentially where we can come up to for this, you know, 5th wave, and as you know, we count a trend. So within our server, Discord server, which link is in the description, we are always looking for the counter trend, because we know that the market maker will like to push price one way or the other, and our job is not to fight the market maker, but actually to jump on the same wagon as the market maker. So hypothetically, you'd expect when liquidity comes back into the markets, obviously next week we've got a crazy week coming in, that they'll push the price, in my opinion, to the upside, maybe clearing out this 17,500 where we know we've got big liquidations, and then a big move to the downside. So we'd be looking for shorting areas around here. And how would we determine that? Well, I mean, if we bring in our Elliott wave. Let me just see which one that is. So I just want to double click on that real quick. Change that to a retracement. So let me just delete that. We can go from our 5th here. So Elliott wave to the 4th. Change this to an extension. We can see, just bring this over here, that potentially we could come up to the 236, which is around the 17,582. We may go a little bit beyond that to the 1.382 again, so we could come up and maybe tag these lines. We've also got a daily pivot point here, a daily high somewhere in this area. So I could see this absolutely playing out. You know, we've had this formation on these waves for some time. You know, we're going back early November. All this has been playing out. So, you know, at some point, I mean, interestingly enough, we had really bad data for the Fed. The PPI was a lot hotter than expected. Also, the consumer confidence was higher than anticipated. So all of these things given cause for concern for the Fed. So now the idea that they was saying, you know, putting it out there as a narrative that 0.5 basis points is a bit of an easing off of interest rate hikes may actually not be beneficial, because if the information coming out is that you know, things like unemployment still not high enough, things like consumer confidence, things like the PPI. So you've got your manufacturing, you know, raising rates for costs for parts. So by the time the consumer price index comes out, what do you think that the net effect? Do you think companies who are, you know, manufacturing products to sell to the retailers via the distribution network are going to absorb that margin? I don't think so. Who will effectively get that? It will be the end user, or the consumer, who will feel the increase, not the actual the retailer. So I can't see it personally. I can't see anything other than, you know, it coming in hot for the CPI, and then of course we have on the 14th the interest rate increase and what that will be. So I'm expecting personally more blood, more downside action. Obviously, we always know how market makers move. They want to try to get value, so they will probably be pushing initially, the moment that information comes out, pushing to the upside to raise to get a better entry, provide liquidity a bit further higher, and then I anticipate a crash to the downside. So, you know, how do you trade these kind of events? Well, DCA is your friend here. It's really the only way to kind of anticipate these kind of moves. So the other thing that I think is a really interesting thing to be mindful of is this parallel channel. So you can see we've absolutely respected this channel, you know, since kind of back end of November. Came down. You know, we had 2 data points at this point. Let me just make that I think I've locked this down. Yeah, let me just unlock that real quick. You can see. Yeah, you can see we just respect we've respected the here, and then down here as well. Tried to come down for a bit of a liquidity grab at this stage, and then it kind of, you know, shot to the upside. So this is going to be an interesting thing once this breaks. You know, could we come down, see some liquidation level? Because realistically, what we've got, this area between 17,450 to 17,600 is a huge demand area. So we almost can guarantee we're going to push up. Well, we can't guarantee, that's not really a good thing to say, but we can pretty much favour that the market maker will want to come up to this area, because there's a ton of liquidity, and that's exactly what he'll be wanting to do. Institute a move to the upside, grab that liquidity, and then come down to the downside. Now, down here, kind of around your 16.7 down to about 16.2. You've got a lot of long liquidations that would be kind of would be liquidated as well. So you've got some really key zones coming up. So that's what I'm going to be anticipating. But for now, you know, my move is DCAing around these levels, catch that move to the downside, and then taking profits on the way down. I And that's pretty much it, really. That's just a quick snapshot of where we are. I mean, look, if you guys want to learn how to trade the way I trade, which I think it's really a fantastic way to de-risk things without getting stopped out on stop losses and stuff like that. Then head over to the Discord server. Everything is in there. I've got a new promo video that I'm about to show you in a second, just to kind of give you some insight. But it is really the only way I like to trade, because pretty much the majority, if not all, can only be wins, because of the safety margin we provide in terms of how we trade. So you're DCA and you're not going aping in on every single, specific point, because you need some level of creep to be able to maintain. If let's say, consolidated areas, if we bring up our, let's see, if we bring up these lines here, these are all the consolidation lines. So where's most volume being traded? A good idea, is to have DCA levels around these areas, because the sticky areas in the chart, they are areas where liquidity is being flowing in and out. You can see here, you can see here, you can see here, all the way through these, and it's interesting, between the zones is where you see the big moves to the upside and to the downside. So an idea might be, and obviously this isn't financial advice, but an idea might be to have DCA levels at these zones and these points, so that when you get the move to one side or the other, you almost can know that once it moves back down, it's going to get stuck again. It may decide to push to the next level, or even the level below, level below, level below. This is the idea. It's about apologies. It's about identifying these key areas, getting good value. You don't want to be just randomly putting in your orders at random points, because realistically it's just gambling, isn't it? You need really high probability setups that factor in these key zones, so that you can obviously benefit from them. So head over to the server. Discord link will be in the on the YouTube channel, so just dive in and head over and come and say hi, and then I will speak to you guys in the next one. Peace out.